What is up, everybody? My name is Mike with Beach Bum Trades, and I'm going to cover a great beginner topic today, and that is, what are candlesticks? We're going to cover the three basic things. What are they? How do they form? And what do they mean? If you'd like to follow along, I recommend pulling up your trading view, and let's hit some charts. I think first thing we're going to cover here is, what is a candlestick and how does it form? And this is a really great example up here. Here's a bullish candle green, a bearish candle red. Here's the high and the low of each one of those candles in that time frame. It doesn't matter if this is 30 seconds or 30 days. This structure will not change based on that time frame. You're always going to have an open, you're going to have a close, you're going to have a high, and you're going to have a low. Same thing goes with bearish. Let's move over to some real world application here. We have NASDAQ minis pulled up on the 30-second chart so we can see a lot of movement happening. And all of you're looking at in each one of these candles is just buying and selling. This is a tug of war. Every 30 seconds, that tug of war is won or lost by buyers or sellers. And this tug of war is going to lead us into the first bit of candlestick structure. And that is called the doji. It is probably one of the most common ones. It is the very first bit of candlestick structure anybody will ever teach you, even if you Google it. Now you have the classic long leg, dragonfly, gravestone, and floor price. You'll probably never see this one ever unless there is an absolute, just abysmal amount of volume in what you're trading. These two and this one are the most common, with the classic doji being the one that we would use for our trading. Now back to real world, the doji is a sign of indecision. So the buyers and sellers are going at it, but nobody's winning. You're basically at a stalemate with this doji. And it doesn't always mean a reversal, but it is a good place to look out for one. Not so much on the 30-second chart, maybe on the 5 or 15-minute chart is where you want to be for this one. Here's an absolute prime example right here of that doji at work. This is an area of indecision where buyers couldn't continue and sellers couldn't pull it out of the hands of the buyers. But it did lead to this reversal. So if you were to play based off of candlestick structure, your entry would have been hopefully at the top of this, but not always. This would have led to a nice trade for you. So 25,607 down to 25,590, you would have made a couple $100. Also, if you look in here, there is our gravestone, and there is also our dragonfly. Now, the gravestone being bearish, buyers were in control at the top, they lost control, and they gave it to sellers at the bottom. Here's our selling candle. Sellers were in control at the bottom, and they gave it to buyers at the top. Not necessarily a buying candle being the next one we are in a 5-minute chart, but it does show, well, we drop back down and then we have our upwards trend. Here's another one, a little bit of an upwards trend. Next one I want to look at here is the Mariposa. I'm sure I'm pronouncing it wrong, but leave me alone. So this is a complete consumption of either candle. So there's no wick on the bottom. There's no wick on the top. The buyer or the seller was 100% in control for this candle's time frame. And this will take us into one of my favorite bits of structure to trade, and that is the double top and the double bottom. And we're going to look at a couple right here. Now, unlike the Mariposa, we're going to have some wickage. All right, 100% consumption of the candle body is very rare, but we are looking for basically this. So we have a big bullish move, we have a bearish consumption of the body of this candle leading to a downward move. So that is our double top. And this can be done on almost any time frame. Go over to the 1 hour. Bet you we can find them here. Let's see here. Here's a nice double bottom. Here's a nice double bottom. Here's a nice double top. Here's a nice double bottom. Let's see. Here's a nice double bottom. I don't know if I'd count that as a double top. Wow, Nasdaq was just really ripping that day. I must have been asleep. Here's a nice double bottom. Here we are. We're found our way back. But you can also use this on smaller time frames to get your scalping in. Right here, that would have been, I would have allowed this candle to complete before my entry and said, that's my double top. This was great. This worked out phenomenally. You know, small examples. This didn't pan out the way they thought. This didn't pan out. This didn't pan out. This did. But that's why we come in with a small size, a couple contracts, and then we add to them as the confluence continues. As it continues, we come down, we say, hey man, we're looking good. Let's add it up. We're not breaking back to the upside. Let's continue down. Slide our stop loss with it. This would probably be the best case scenario for you right here. You know, hey man, let's let this candle close. Let's make our entry. Oh, look, we're not breaking 25,606. Keep going, just dragging the stop down to the next candle. Next one fills, drag it down to the bottom. I don't like the wick. I like to do the body and just let it melt away. One more thing I want to cover is different types of candles. You know, this may not always work for you. Some people like to use bars. Some people just like a line, and that's fine because we have that. We have bars, which are hard for me to read, but it's basically a candle one-sided with your close. Where's my volume candles? So this is a volume candle, and basically it's nice because the thicker the candle, the more volume that's in it. You can see as you're coming down, you're losing your selling volume down here. So this may be helpful for some people. Just a line. You can use a line. A line is great for doing higher time frame charting. Like, hey, look, I'm looking at my nice downward trend right here off of this high. That's a nice, clean way to do that without the wicks becoming a part of it either. Almost, you know, same thing with this low. If I was looking down here for something, there's step lines, baseline, which is kind of nice too, especially if you're doing the longer term stuff. Columns, just a whole bunch of volume. You know, some of the stuff I haven't even really dug into yet. Volume footprints. Oh, well, that looks nifty. One of the ones that I do recommend, especially for beginning traders, is Heikin-Ashi candles, and it is free here on TradingView. Heikin-Ashi. It gives a very good, clear image of direction. Let's go back down to a smaller time frame here. Let's look at, let's get rid of this drawing. Let's look at this versus our regular candlesticks. So candlestick, you see a lot of clutter. Red, green, red, 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 green, red, red, green, 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 red, green, green, green. Great. All right, come back. Our Heikin-Ashi, very clean looking. This is showing downward momentum, upward momentum, downward momentum, upward, downward, upward, downward, upward, downward. This is something really nice to begin with. I hope you found this helpful. Sorry if I ramble on a little bit. I kind of nerd out a bit. But if you have questions, comments, something I didn't go in depth enough on, let me know. You can put it in the comments here, or you can just add me on Instagram and message me directly. I'll answer right away, and we'll get it figured out. Thank you so much for watching this video. I appreciate you guys. Stay trading, stay safe, manage your risk wisely. Mike, Beach Bum Trades, out.